All right, family. If you're just joining this channel, um, this is going to be um, one of the videos I'm making on a series talking about order flow. Right? It may not be like in a playlist or something of that sort, but that will be the premise of the consecutive discussions for these videos. All right. So today we're talking about order flow. Right. So when we are talking about order flow, we're actually referring to what exactly drives price. Why does price and deliver the way it does, right? There's a certain thing that drives price. That is what is called the order flow, right? The order flow of the market. How does the order flow? What attracts price? Where is price drawn to? And all of that. All right. So that being said, we can now look at the charts. Now, first things foremost, I would like to remind you that uh, the market does not move this way. Like you find the market make high, low, and then on traded markets, you believe that markets should be doing something like this, right? Should give you this clean high, let me just orientate this. So you believe that the market should you know give you the high, the low, the high, and then the low. Network. All right, sorry. So we expect the market should look like this, then tap us into that that demand zone. We have that demand, then we create a new high. What we should believe, right? So market should do create a new high, form another demand zone, make a new high, and all of that, right? This is how we all expect the markets to look like, right? So the market to look something like this, maybe come for this demand zone or whatever, S&D, this demand zone, make a new high, make a demand zone, and that isn't actually the case, or not always the case, because the market does not move in this fashion, actually, right? What you should find on the rate chart that the market is will usually move like this, liquidate lows, go higher. It may not even come down, just push higher, go higher, then liquidate this low, actually come back down here, then make a new high. But maybe kind of reject around there, come down a bit, still reject, liquidate this low, and then go higher. Right? This is how the market actually looks like in the real sense. Now, that brings us to this. Now, why is that the market moves this way? What is the story or the context behind the price movement? That is what we call the order flow, right? So, what is the order flow? Now, I have done this in the previous sessions on the price magnets, but I've go over it again. That price is drawn to two basic things, right? And these are the magnets. I call it the price magnets, right? So we have two price magnets, which are will be listed in a moment. Kind of sloppy with this. So we have two price magnets, which I'll be listing in a bit. We have the first one, which is called the imbalance, and then the areas of liquidity, right? So we have imbalance. Those are the two things that drive price, right? The price magnets. They're like magnets that are always dragging price. So we have liquidity pools, right? And then we have imbalance or inefficiencies, right? So we cannot see imbalance, right, in brackets or quote unquote FVG, five fair value gaps, right? So these are the two things that drive price. So now understanding that we have two things that drive price, the liquidity pools and then the imbalances. All right. So these are the two things that should give you the premise or the sentence. Now, when you have noticed price magnet, that's what other thing you should add to be able to identify the order for the market. You have to add what we call structure, like the structure of the markets. So these are the two things that really help as you add structure as a kind of confluence, right? To add this is actually the holy grail. So if you can understand this concept, then you have the holy grail in trading. You are able to predict what the market is poised to do and all of that, right? So this is the holy grail, right? The holy grail, right? Or the X factor. Let me just call it the X factor, right? So this is the X factor. So if you're able to get this is the X factor, right? So these are the two things that you're obviously looking at. We're going to chart in the jiffy, right? I'm not trying to give you the premise or the discourse behind it, right? So we have the liquidity pools, the imbalances plus structure. That gives that is the X factor, right? This is basically what you need to know to be able to trade properly, to be able to navigate the market with such accuracy and all of that, right? Now, liquidity pools and imbalances. Now, a liquidity pool is basically where orders are resting, right? You must understand this. Liquidity pool is basically where orders are resting, right? Orders are resting, or let's say stops are placed, right? This is where orders are. The liquidity pools are areas where money is resting, right? That's where money is residing, right? Currently. So temporary residing. That's where money is residing. We're explaining that in a jiffy, right? So the liquidity pool is just simply where the money is residing. That is where you could find this basic chart patterns, trend lines, double tops, double bottom, triple top, all those demand, supply, resistance, support, all those places that people would like to get involved in the trade. This is what we call liquidity pools, right? Like the name implies pools, like a pool where you will find a lot of orders. I'm talking about millions and millions of orders. We have a lot of traders in the whole world, right? They would likely put their money, or their money, their stop loss will actually be uh, placed. All right. So that's being understood. Now, what is the imbalance? An imbalance is basically consists of three candles, right? You have the first candle, right? Then you have the second candle, and then you always find three candles to consist an imbalance, right? Now, for each candle, you usually find what a wick to the upside, right? You know this already. So usually you'll find a wick, they make this black, so you can see it properly. Usually you always find a wick on a candle. I'm kind of zooming in a bit. So you usually find a wick on a candle. And for the upper candle, you also find a wick, right? So you usually find a wick, right, to the downside, right? So when you find this wick, right? So when you see this wick on the both candles, now notice that between this week and this week, what do we have? Just one straight candle. And most times the candles are usually very big, right? So you have this week and then you have this week, right? Then what do you have in between? You have what? The imbalance. So imbalance is just simply what? That's distance between this week and this week. That's the imbalance, right? Your price inefficiency. And this is what actually drives price on the bigger time frame actually. So the distance between this week and this week is what we call imbalance. This is one thing that actually drives price a lot, right? The distance between that week and this week is actually called the imbalance. And most times it's really very large, right? So now we understand what the imbalance is and now what the liquidity is. Can we go to the rate chart? Yes, we can. So let's go to the GBP AUD to see the order flow of the market and how we can identify this with structure in order to have the X factor. All right, so let's swipe up for this. All right, so now let's go to the richards. Now, using the weekly time frame now. So this is the weekly time frame of the GBP AUD, that's the British pounds against the Australian dollar. So we're starting all the way from here. Right, this is what date is this? This is 2015. Wow, amazing. I love how trading keeps data. And this is the weekly time frame. All right, so let's try to understand what has happened in the markets, right? So from the wider view, okay. From the wider view, I can see that okay. Look at something here. Let us start from somewhere around there. So look at this market. All right. So look at this market. Look carefully. Remember that we have two things that drive price, which is what the imbalance and what the liquidity pools. Look at what happened there. We had equal highs resting here, right? Which is a liquidity pool. Very denoted by what the S dollar symbol, right? Okay. So we have a liquidity pool resting up here at that point. So always market to the future when it does not been taxed. So we had a liquidity pool here, right? We still have this equal high, all those places where you find markets reject off. So we had another liquidity pool here. Then finally this held, and you can see the market tagged this particular high here. You can see after this high formed, although it's created an equal high, you can see that after this high formed, what happened? Market blasted through it, kind of created a kind of equal high here, and then rally down. So this market has been super bearish, like super bearish, right? So we had a kind of very bearish market until this point. Now look at this market. Now look what happened. We had a kind of old high here, or old low, yeah. Yeah. So markets kind of came in a bit into this let's say resistance or support level. Right? I can see markets kind of came into this, and that's what is interesting of. All right. So what happened there? That's not really my point of the discourse for this series, for this teaching. Right? Just follow me carefully. Now look at this market carefully. Now we saw this market was trending upwards, right? So we had this liquidity stick right here. So we saw that there was money resting here. You can see this equal lows. What happened there? Before the market bought impulsively, why did the market not give you that double top or double bottom before going high? You can see that was actually was a liquidity pool resting here. And when this liquidity pool was tagged, what happened? Market was not reaching for what? Another liquidity pool here. That is, we had all these equal highs resting here. So you can see how price is drawn to distance, right? So if I was trying to trade this chart and I was maybe somewhere around there and I saw markets drop down inside there, I can see that there was a kind of relatively equal highs here. Some people will be like, okay, this is actually resistance level or this is supply zone. They would also maybe some will even draw this one and say, okay, on supply zone, all these highs here, resting as a kind of resistance, right? So let's say market tag there. Now, understand that the market is drawn to two basic things, which are the liquidity and imbalances. And knowing that this market has been overextended for a given period of time, should you be trying to, buy the GBP AUD somewhere, somewhere, we would like to sell this somewhere around there, where you can simply see that um, this is a kind of maybe a long teaching, but I want you to get the point, right? You can see that the market is already tipping its hand and it wants to go higher, right? So you can see that market has taken out was liquidity to the downside, this liquidity pool, this relatively equal highs, relatively equal lows. I can see liquidity rest up here. So you don't even need anyone to tell you. So maybe you see price drop down here, then you can start looking for what buy opportunities and buy opportunities to do what to take out what this high, take out this high, take out what this high, and then eventually what this high. So now this is just understanding the order from the market. The market has done was taken out what the sellers, the buyers down here. So the market is drawn towards liquidity and imbalances. So saying this, you should know that the market is doing was poised to do what go higher. And let's say you saw this, you can see that BEM price ran all through this. And not only that, you can see that there was another was liquidity pool resting here. Look at this clean resistance level, right? Because why is it a liquidity pool? Because when people saw this zone holding for quite a number of weeks, they will see that what a strong what resistance level. And as a smart money trader, we don't trade resistance levels, we don't trade others, we just use as a kind of guide to aid our trading, all right? So when the market drop down to this liquidity pool, those liquidity resting here, up here, and up here. So what should we expect? That price should what? Go what? Higher. This is just understand order flow. So if I was watching this, I would have maybe buy as I'm going higher, close maybe prices around there, go higher, and then market was poising higher and higher and higher and higher until it grabbed all through that. Now, remember that I told you earlier that the market when it's bullish, it doesn't go very clean, give you this high lows. Look what happened there. You can see that although it was giving those clean setups around there, we had the high here, we had a low, we had a high, we had a low, we had a high, we had a low. Look at market. Market went below that low, right? So if you were trying to buy it, you would have lost this trade, right? You clean this low, clean this. If you want below this low, and let's say it drop below this low, what do we have? A break of structure, right? So when that BOS happen, look at what do I mean by break of structure? That's not the market did what it went above what this high. So market clearly would do what tip to his hand that was trying to do what go higher, right? So look at it here. So market drop down. He came for this other block and there was rather higher. So let's say market drop down. Those TP is hand. Remember that what we had was those we had bullish objectives on this market, right? The market was bullish and we likely to do was remain bullish, right? So when the market did that, what happened? It tipped down, right? Collect this low and gave us that break of structure. So now understand that the market has taken out the liquidity to the downside. Where do you think the market is likely to go? What? For this higher. So this would be the next area of liquidity or the draw on liquidity. You can see market tapped down, bam, went for this high, came down, the next high. The market kept taking highs until it was done. Now what happened there? We had was this strong breakdown. And what happened when they break down? You can see that there was what a liquidity grab right here, right? So markets gave a kind of engulfing candle. If some people saw this kind of like, okay, we have a weekly engulfing candle, it's likely the was going down. You can see the market that was not the case. It ran higher and then broke lower. So that was that bearish was break of structure, right? So now understanding that we are now bearish on this market, since we had was this very strong break of structure, what now becomes our new target? What becomes our new target? Remember that we're adding this in line with our structure. Whenever you see the markets break structure, you have liquidity operating to the opposite direction, then you have a trade idea. So now, what do we have here? We have this low to be captured. We have all these lows to be captured. The areas of liquidity, because people are actually going to try to buy this. They look at it as resistance, demand zone, all of those things, right? So we had all this drawn out and extended the future. So we had so many reasons why we do was price was come lower, right? So we have that. Now we had that was break of structure right there on this pair. That is break of structure, right? Now when the market came back for an imbalance. Now let's look at carefully. Since the market came lower, look carefully here. Let me show you something. So I've already mentioned an imbalance here. So when the market broke lower, we had what an imbalance right here. So we had this imbalance right here, like I explained earlier. That a kind of tiny imbalance in between these two candles, right? That a kind of tiny imbalance right here. So between here and this point here. This is a weekly time frame though. So we had that imbalance. Or let me just kind of replay and maybe take it to the daily time frame, right? So let me just take it down here. Then maybe take it to the daily time frame. Let's say the daily time frame. So let's take the daily time frame. You can see that was the kind of let me use a time frame that's kind of close to daily. Let's use weekly. Let's use 6 days time frame. 6 days time frame. All right, it's very clear. So you can see that when price did that, what do we have here? After a break of so what do we have? We have just actually the imbalance from here to here. Right? You can see that there was an imbalance created here. Afterwards, that break of structure, markets going below this last obvious low. So you had it was imbalance for me. You can see how price came for us, a very imbalanced low. So now this should have been your opportunity. Knowing that price is drawn towards imbalances and liquidity, when the market broke lower, what should you expect? Market was to reach for this imbalance. Can you see another imbalance above here? No, there's no imbalance above. What do we have here? We had the market has done what? Clearly clear this high, so that all the suggestions here be clear by this candle. Market showing that its kind of view was going higher. So when we had this liquidity grab, that was the first sign the market was going to be was bearish. And then we had it was this imbalance forming for a sell was concentration. Then we had it was all this daily was objective to the downside. All right. So when this happened, then we have had was our fair data was to go lower. So when the markets came for that imbalance, and what happened next? Let's play. Can see markets came for that and it's a drop down. I can even see another area of liquidity right here. So I would have looking for what sell opportunities, only sells. Looking for only sells, to take price all the way to those lows. And you can see how price has been going aggressively for it. And you can see what happened there. Bam. So we have our first area captured. Now we can pause. So now you can see that the native price broke down and reached for this imbalance. This would have been your swing setup. And the target should have been this low. Right? I'm taking maybe some weeks, you can see some retracement and all of that. So you can see. So this is how you actually use the bigger time frame to frame your order flow. You are seeing that the market is poised to do what? Go lower. Right? I don't trade GA. This is my first time looking at this chart. I don't trade GA. Right? So you can see that this low capture, so you can simply eliminate that low. So eliminated. We still have two lows to be captured right here. So that is low. And let's just see what happened there. Right, let's see what happened next. Let's see how price has been delivering. Right, although I can see an imbalance forming, let us see. I can see an imbalance forming in between here and here. Let's see if price came for it or if it just went for the low directly, right? Right, so we are bearish on this guy. Let us see what happened next. So you can see, okay, it targeted us low. So basically, target low. What do we reach for? Can you see imbalance? And what happened next? It went a bit higher. And then we now have what? A new target right here. Let's pause that a bit. Let's pause a bit. Let's pause a bit. Let's go back there. I want you to understand this very well. I want you to understand this. Now, When the market came for this imbalance, right? I told you the market is drawn to what imbalance that was liquidity, right? So markets came for that imbalance, and there was, if you are trying to sell there, maybe you made a loss, right? That's why you always good to wait for what lower time frame confirmations. So use the bigger time frame to understand the order flow of the market, and then you can frame your trade ideas based on this. So look at what happened there. If the price tagged this low, what happened next? We saw that was that aggressive buying. Can you see how this is pan out? So you know that market makes was lower highs and lower lows. So market should make a low, retrace, make a low, retrace, make another low. You understand? That's what the market is designed to do. Low, retrace, low, retrace, low. All right. So now, when we took out this low, what do we have here? So basically, we took out this low. What should you expect? Buyers. And we have what? You know, our market is designed to do this. All right. So now, when we saw this low captured, what happened next? This imbalance would have been the rest area of what interest, right? Although you may have still gone for this low, but in this case, the market went to do was make it was a new lower high. And why again? You can see what an order block forming right here, right? You can see an all indicator order block right here. You can see price it was went for the same balance, filled it, and went for this order block, and you can see now when this was start, what will be your next area here? This low will be your next target for yourself. So trying to sell or down here, right? So let's see. So now this has been filled. Let us see. You cannot delete this imbalance, right? Then we have another imbalance forming inside here. And let's say between this handle and this point here, right? So somewhere around there, we have an imbalance somewhere like this, right? So between that week and this week, right? Let's play and see what happens next. Let's see. Can you see? Can you see how this is panning out? I see how this is panning out. The market came for that imbalance, right? I thought the market is drawn towards imbalances and what liquidity pools. So when the market Z was broke lower, right? Well, it came for this imbalance first. You see how sell aggression to the downside. What do we have? So the market was call for that imbalance first. I can see when the market came for the imbalance. What happened next? It came for this low, and then what? This low. Now let us see what happened there. So we have what? Another imbalance forming inside this point here. Just follow me carefully. This is a very brilliant teaching, right? So look at this. You have imbalance forming here. Another imbalance now forming there. Now we cannot eliminate what this low, right? Cannot also eliminate this low, right? Let us see how those two lows will be captured. Let us see what happened. Let us see what the market did next. Let's see. Right? All right, this time it didn't come up an imbalance, just was you kind of cleared everything. And after it's cleared, what happened? What happened after that low was cleared? It still continued doing what trading lower. Right? So let's see what happened next. Okay, we wait for this low. Did you go for this low? I have another low there. Can you see? There. Can you see? And that's what I did it. So have you seen how this thing play out nicely? Understanding the structure and the objectives of the market. You're looking at for only liquidity pools, imbalances, and then structure the market. Once the market give you that better structure, this is how you can apply your order blocks, your zones, your resistance levels. This is how you should do it. All right. You have to understand the order flow of the market from the bigger time frame perspective, and then you can frame your trade ideas using this concept. You can see how these are delivered nicely. Happening, but although this was not the market was low, going to come back here and then go lower, right? So not all that I expect the market will come back for this imbalance and then go lower. Now, what do we have here? Let's pause a bit. What do we have? So we have reached into all these lows. What do we have here? Let us see. Let us see what's happening. So this is a 6-day time frame. All right. What do we have here? We have what? Liquidity pool was resting here, right? That liquidity pool resting there and the imbalance above it. So this market is likely to point to those go here. Why? Because we have captured all these lows. So you can see that even this very low as it was captured. So the next low is what quite far, right? So it's quite far. So that's the market to come for that yet. So market is likely to go forward. The one that is in line with structure, the closest liquidity. All right. So let's see what happened next. Did it go for that? That builds the liquidity here. I'm looking for price to come down up to this point and capture that high. Let us see what happens. If that happens, you see. or it may go for this low, right? It may go for this low. Since we are still bearish, right? Let's see what happens. Let's see. This was a kind of very slow week. When equity is scattered, always expect to kind of dance around. I can see what happened next. You can see our price was now creating a kind of resistance level. You can see it's making this a kind of it's kind of inducing traders to come to that point. Let us see the market went for the low or for the high. Can you see how price was just delivering, up, down, up, down. So you have to the liquidity point. Since you are bearish, we might likely see price go lower, but I can see balance for me here. I see price will go higher. All right. Let's see what happened on this. I see how this is very simple, right? You can see how price was dancing around, inducing traders to come to sell. What is this? Also, you can see PEP. Price was clear that high. Can you see it? Can you see how clean this has been? This is just price delivery, right? So you see imbalance and was liquidity to understand where price was poised to go. But let us see the imbalance to the future and see if price is taking for that imbalance. Let's see if it's taking for that imbalance, right? BEP, capture the imbalance. Can see? Can see how this is spun out so nicely. So this is what I'm always looking at. When I'm looking at other flow of the market, I'm looking at for those basics. I'm looking for the structure of the market, the other imbalances, and the areas of the business. You can see that imagine price it was cleared tap this imbalance. What happened? Price it was there going lower. Can you see the heavy rejection after it was tapped? All right. So the rest was history. So from here, I'm looking at this maybe as an area for market, buy towards, this area and all of that, right? So for me, I'm looking for what's more bullish price action. At least to capture this high and all of that, right? So let's take to the future. What time is this? Last year. So you can see how this has just been, dancing around. For me, I'm looking for price to, go for this high and all of that, right? You can see how price has been liquidating lows. You can see this low, equal lows, double bottom. You can see first touch, second touch is what happened next, liquidated. This is just order flow, right? Let's pause a bit. Look at this order flow, look at it. So now look at what happened there. So when price came for this high, you can see this high liquidated. What do we have here? Double was bottom, right? What do we have? Price was liquidated that low. You can see how this is panning out nicely. And what do we have inside here as well? Imbalance. So you can see this imbalance forming between here and here. So how there was a reason to do was bullish. So the market liquidate this high. What should you expect? The market was come for this imbalance and eventually was this low. You can see how this is how the market delivers from areas of liquidity, the areas of imbalances, and then we have this up down movement. That is how price delivers. This is the truth about the reverse of the market. You will not find any teaching that is more simpler than this in breaking this down to the Braxton. This is the bastion, folks. So you can see the price it was. Look at this. The price took out this low, this liquidity pool. What happened? The thing was this high, and what said going was for our overall target, which is what that overall high, up all the way there. Let us see what happened next. The price actually go for it, and I can see a kind of imbalance still inside here. Kind of imbalance was resting inside that point. So I was expecting price to come higher for the longer term, right? So we have this imbalance here. If it's fine, if it doesn't come here, that is still fine. But since we saw this liquidation of this low, most likely, like I said, price and liquidating lows and all of that, right? So this is just order flow for you. This is how to identify on the bigger time frame, how or where price is poised to go towards. Right? Then you can have frame your trade ideas with that in mind. All right. This is just a bigger time frame premise. I can see price was started going forwards. What happened there? Was price it was created was another was equal higher. So that's equal liquidity pool resting here. And what the price do? There was a trend line forming inside here. You can see this trend line here. What the price do? It ran through the liquidity pool, take out all these lows. You can see that all these lows were captured. You can see this low captured. You can see this low was captured. This one captured. This one captured. And then what would have happened next? This high, right? So you can see how this is panned out, right? Market went for that relatively poor high, and we are still trying to see if we can go forward. That's imbalance and eventually that's overall high. So let's see what price is next. So this low is in trouble, right? This low is in trouble. This low here. Let's see. Price eventually they was came for that imbalance, right? You can see price already came for that imbalance, like I marked earlier. You can see how price was and bam, that was it. So did I need look at it? Can you see how other food delivers nicely? You can see high back that high. I don't trade GA. For those of you that know, you can see how I've been able to show you how price is delivering, right? So we had this high that I marked earlier. It took some days, but that was the overall target. I can see price came for it, right? So I've split this down to the track stacks. You should be able to identify liquidity order flow with these things I've just given you. All right. So just need anyone to hold your hand or trade for you. You can use these things I'm giving you to frame your trade ideas and all of that. All right. So that is that. So I just want to give some information. So we are having about 3 programs. This is actually, I should have said this earlier. So we're having some programs at Elektronfx Academy. So I would like to just share my Telegram screen quickly so you can see it. Right. So we are having our a boot camp, our cryptocurrency boot camp. It's running from the 4th to the 6th of on the 4th to the 6th, 7th of November 2020. It's gonna be an amazing session. So we're going to be having me as the host. All right. We have Ayodeji Amole, the principal person of Avila Global. We're having Victor Obi. It's going to be an amazing one. All right. It's free of charge, 7 p.m. daily, and it's going to be on the Telegram group. The link will be in this the description of this video. All right. And then we'll be having before the general mentorship program is still ongoing. It's still ongoing, right? You can see we'll teach you how to trade, from scratch. This is all it has. We'll teach you how to trade from scratch. Live classes every week. A singular group to learn and earn. Free this and all these freebies, right? It's all broken down in my mentorship program. For instance, I just taught you how to identify order. I didn't actually give you how to make your entries and how to maximize this. But in the mentorship program, I break this down into details, right? And you can see our students' result. I've been doing very fine. You can see students' results. I posted a trade idea on EU. I can see students, made 1:4. And this is actually his first 1:4. Like he has been on mentorships, but in my mentorship, he got this idea, right? So this is why you should join mentorship programs. We actually tell you what works and what doesn't work. So don't go and be guessing and making mistakes, wasting time, all right? So see you in the next video. I hope this was insightful and beautiful for you to learn. I hope this was learn. You want to like, subscribe, and share this video, right? So this will be the end of this video. See you in the